Ladies and gentlemen, welcome back to another episode of the Moonshot NFT Podcast. I'm your host, Elliott, joined by my wonderful co-host, Matthew. Matt, great to have you with us.
Great to be here. Good to see you again.
And we are trying out a new podcasting experience. As you can see, we've, due to unforeseen circumstances, had to try this podcast virtually. So we've worked a bit of technical wizardry, and hopefully the quality will be just as good. But we've got some pretty exciting stuff to talk about today. A slightly broader topic that was spurred on by, an experience in real life that me and Matt had in the last week or so. And that's brought a interesting idea to Matt's head. So, Matt, what did we want to talk about today?
Fortunate, as I say, a week ago, to have an audience with a dragon. And so this being a more broadly speaking, an opportunity to talk about investments, because of course the Moonshot DAO has been set up as an investment club, specifically for NFTs, of course. But when you think of investors, who are some of the most well-known and biggest investors, kind of in the public eye, it's the dragons, right, from Dragon's Den. So yeah, last week we were lucky enough to sit and listen to Sara Davies tell her sort of story and share a few insights into her life as an her life originally as a kind of business person herself, the creation and sort of her where that came from her sort of upbringing and parents essentially, and then how she got started in business, which is quite a fascinating story in itself. And definitely, I heard of enough things to sort of hopefully fill out a few minutes and provide some value to anyone listening to this.
100%. And it was very interesting. And yeah, first and foremost, I bet if we did a poll of the country and asked the general populace who are, name 3 big investors that you can think of, I would, place a hefty wager that the majority of them are going to point to 2 or 3 of the dragons, right? The dragons from Dragon's Den, that huge program that's gained so much traction throughout the years for watching people come on and pitch their interest in business ideas only to be invested by one of these various business moguls. And so it was fascinating hearing Sara's story, especially because, for me, Sara Davies, for anyone who doesn't know, is she Welsh? Or no, she's up north. Proper northerner, Newcastle way, I think.
Yeah, like County Durham somewhere.
Yeah, County Durham. And she's a lovely lady. And so she earned her many, many millions. I think her net worth at the moment is around 37 million. But she grew this in the craft industry, which is fascinating. So quite often when you think of all these business moguls, the arts and crafts industry, it seems like a slightly difficult route to get there, but her story is very fascinating and how she got involved in this craft industry, and she really was able to have a lot of success in it because she created her own signature product. It was called the Enveloper, which is an interesting tool that you use to create like custom envelopes, which was a particular gap in the craft market that she discovered. And this just went on to have astronomical success and form the foundation of a very, very big business. But what was most interesting, and the reason that we're bringing this on as a topic for discussion, was, she had a lot of this success when she was very young. It's when she was 19, 20, this was all popping off. And she joined a angel investing syndicate when she was like 21, 22 as well.
Yeah, it's crazy. That's kind of what got my attention was, firstly, I didn't actually realize how young she was anyway. I'm pretty confident she's not going to listen to this, so hopefully I haven't just offended her. But yeah, I was taken aback a little bit. I think she did talk a little bit about, didn't she, and how serious they make them look on the show and how they have to, come across as dragon-like, very aggressive, serious people, which I think, certainly made me think she was a bit older than she was. I was pretty shocked and kind of surprised and impressed to find out she's younger than me, which is which is nice. I was amazed that she said she joined this, as you said, this kind of initial investment club when she was like 22 years old, I think she said, which which I don't think a lot of people could say that. which is interesting in itself. And it reminded me of my initial, because prior to the Moonshot DAO and getting started with this with you, I have not done any investing at all. It's just not, it was something pretty alien to me. Although back in 2003, when I was similar age to when she got started, I did actually go to an investment evening. I saw this little ad in the paper, as it was back then, and it was an advert for the Property Investors Network, this group called PIN, which actually I think they only started in that year, in 2003. And I went along to this evening and in Northampton, and it was really very interesting. And I was sort of completely convinced and sort of drawn into what they were saying completely. It made a lot of sense. But what I didn't have at the time was any money. And so, I was just able to sort of listen to it. But then, investing. Yeah, big time. Especially when they're talking about buying houses, which even back in 2003, they might not be what they are now, but they were still, prohibitively, yeah, you know what I'm saying, expensive when you don't have a lot of funds in the bank. So, but of course, the benefit of hindsight, as we all know what the property market has done over the last 20 years, and so it wasn't a lack of sort of awareness for me at that point. It was I thought a lack of sort of resources, but of course, as I've later learnt, and I tell a lot of people now in our business, it's never actually due to a lack of resources that we don't do anything, that we don't take action. It's only ever a lack of resourcefulness, right? So I'm sure if I'd have really wanted to, and it had been, a strong enough desire at that point, I could have found a way to get involved. And I think I definitely, I think that would have been I know that would have been a very good move at the time. And so, but that speaks a lot to her character as well, because through the story of how she got started and the initial sort of court case and battle that she had with as you say, her own product, and then she'd had this meeting with Helix, which is the company that make sort of a lot of stationary equipment, right?
We all had a Helix protractor in our time.
Exactly. So I've heard of Helix. And so she had a meeting with them, which she thought was like very positive and potentially full of opportunities to come, only to hear nothing for the next 6 months, until she then saw that they'd released a copycat sort of product.
So they really got her dirty there, because the meeting was as if they were going to bring her on as a key supplier, and this was going to be a big opportunity for her business. And then they did the old switcheroo and snaked her, stabbed her in the back, and 6 months later pulled out their own absolute rip-off copy of her best-selling product. It was a deviant move.
Yeah, which for most people in their early 20s, or I think it may have been before, because she developed this, hadn't she, in her last year of university. So, but yeah, let's go early 20s. Like most people, I think, would have just rolled over and given up and like, well, they're too big for me to fight. But she didn't, and that comes down to pretty much that statement I've just said. She didn't have the resources to potentially have a £250,000 sort of legal bill if it all went wrong, but she was resourceful enough to figure out how she would be able to fight it, and she did fight it. And to their surprise, she sort of called their bluff, didn't she, really? And actually, long story short, ended up winning. So what she said, actually, didn't she, that she's still got a garage full, or a storage room full, of all these Helix sort of copycat products that she can't obviously doesn't have anything to do with, but can't bring herself to get rid of, right?
Yeah, no, it was a great story, and yeah, definitely inspirational, and one of those things where you got to have a lot of guts to stand up to a big player like that, but she called the bluff, and luckily everything ended up all right. But to draw it back then to her foresight as well, to begin to look and investigate the world of investments when she was so young, because as you touch on, I think it's one thing in life to earn a lot of money, create a business and have success, but it's another thing to actually retain that money and actually grow that wealth over an extended period of time. And so this is where obviously the world of investments come in. And so there's nothing new in the world of investments as a whole. The concept's been around for a long time, but the different, I guess, asset classes and opportunities to invest have changed drastically over the last few years. So traditionally, it would be all in your gold and silver and your precious metals, because these are, scarce resources that are universally seen to be very valuable. There's only a finite amount of them on the planet as well. Not like, our pounds and dollars, which can be sort of printed out of thin air. And so because of this, those metals have got, I think it's a 5,000 year track record of basically appreciating in value, because through generation after generation, that has been a constant, source of wealth, so to speak. So there's a lot of that in the past. Then, of course, in the more recent years, past the Industrial Revolution, and I don't know when the stock market began, but certainly in the last 100 years or so, it's really took off and has been seen as the sort of mainstream norm. And so whenever most people talk about investing, that's typically what they mean. And I guess the only exposure that, the vast majority of people will have to this sort of stuff is through their pension, right? So anyone working a job at a company will have a pension that they pay into and their company will pay into. And this pension is basically then typically they go out and invest that money. So over a period of, 30, 40, 50, 60 years, your pension slowly grows with value so that when you retire, you have a nice little pot. And I guess this is the first, switch that went off in my head around investing, because I've been quite... not obsessive, but I've been very interested in investing and what to do with my money over the last few years, and we can get onto the stories as to why. But were
you? Quick question: were you younger than Sara was when you got started? Because I've got a niggly feeling that you probably weren't you?
So I remember I was about 16 and I bought but to be fair, so a few stories. But I was about 16 when I bought the How to Invest in Stocks for Dummies, right? And
that was a book you read at 16 years old.
Well, it's a book I tried to read. I bought it, and for the life of me, I could not understand a word of it, and I had no idea what was going on. So the ambition was there, but the execution, I was a little bit too premature because it made no sense.
Good effort. I'm impressed.
It made no sense, but so I was always curious. It wasn't until I was a little bit older, and truthfully, in fact, in the last couple of years, when I've started my business and actually grown a relatively decent stream of disposable income, shall we say, that all of a sudden now my initiative and drive to learn about investing has gone through the roof. And I think that's very natural. And to pull it back to your story of your Property Investors Network meeting in 2003, that probably would have been your excitement and levels and drive to really commit to that and do something. Probably would have been different if you did have, 100 grand in the bank or whatever, a big chunk of cash that you could do something with. Because I do empathize with a lot of people when, you're working a job and you're putting away your little savings every single month, that investing is not going to be massively front of your mind, and that's a very natural thing.
And it speaks to what it makes me think of, and certainly I've been thinking about this since we heard the talk last week. Property, we're brought up being told it's a very safe investment, right? It's something that our parents did before us, their parents did, and of course, across a few generations, it's made some families absolutely, it's been life-changing, right? Mm-hmm. And so it's a very sort of sensible, safe thing to do, and I'm sure that's why I felt compelled to go along in 2003, and it all made a lot of sense. But of course, it's a huge place to start. Like, you can't just do it with a few grand in the bank, which, to bring it back to NFTs, kind of, that's one of the amazing things that we found with this sort of marketplace, an investment opportunity 12 to 18 months ago, because you can get started with a much smaller fund,
Exactly. Could have got a Bored Ape for $200, and that would have been worth $350K at one point.
Exactly. And like a really recent example as well, and I'm not too close to it to be able to share too much about it, but like my brother, who started supporting and investing in this photographer's work about a year ago, or close to a year ago, it must be. Initially it was just a couple of sort of small collections, which did not cost a lot of money. He's a well-known photographer in the sort of IRL world, but he's getting started in NFTs, and because Jay has been like really heavily involved in that community over the last certainly 6 to 9 months. He's then, when he's added new collections and done new drops, my brother's received quite a few of the new collections, and they've just dropped this brand new 3,000 token Moon Girls collection, which Jay's now got over 20 of, and he got lucky with the drop, so he got a couple of rare ones. Like, out of the 3,000, he's got rarity number 23, which is just amazing. Really lucky. Yeah. It's got an X copy background, so it's like
nice.
It's like, he's so fortunate. But
that's it. X copy being a very famous NFT artist, for those listening.
Good point, indeed. And so, but all that got started, and I'm very confident he'll do well with this photographer's collection now. But it all got started from a really quite a small, modest amount of money, which is just not possible in things like the property market.
100%. Now, my thoughts on that are, when it comes to investing and choosing what avenue to invest your money, it really depends on where you are in life and where you are in your wealth accumulation journey. Because if you're right at the beginning and you don't have that much saved up, then you're arguably a little bit better off punching for some of the slightly more risky assets, shall we say, like your NFTs, like your crypto, which has, obviously much higher risk of going to zero, but ultimately much higher risk of very significant returns, those 10x's, those 100x's. Because if you have got, 500 quid and you put that into, the S&P 500, shall we say, which is just a standard index fund of the 500 biggest companies in the US, and that's going to grow on average, 12% a year. So after 1 year, your £1,000 is whatever 12% is. Not going to embarrass myself with those quick maths on air, but that's going to be a very slow return over time. Now, of course, compound growth will kick in, and so when you're many, many years down the line, that can start to pick up and quite quickly become a very substantial sum. But when you're starting from an amount that small, it's going to take, 40, 50 years, maybe even longer. So for the real long-term game, not a bad shout, but you're going to be waiting a lifetime, in essence, to effectively get that rewards, when you could enter the world of NFTs, for example, and do lots of research beforehand and take a few punts on some of these projects that have a much higher chance of yielding a higher reward, understanding that it is a bit risky and it may go to zero, but ultimately, at this stage, you're better off playing offense to try and build your portfolio in that way, rather than playing defense. Because I think when you are a much more mature investor and you reach a certain stage of net worth and you've accumulated a lot of this wealth, then your game switches, because now you don't really want to be playing in these big risky asset classes that have huge 20, 30, 50% drops, in the blink of an eye, just on an every other Tuesday, for example. No, you want to make sure that you're protecting that wealth, because once you've got it, you want to protect it. And that is where your more traditional asset classes, like your stocks, your index funds, like your even your fine art, is a big one, but particularly your property. And there's an interesting anecdote of, I can't remember the name, but there's an Italian family, multi-billionaire family, that have been billionaires for many, many generations. And this family was able to sustain their wealth through, hundreds of years, many generations, through all the horrible events that went on and the changes in government and civilization. because they always diversified their wealth into three parts, three equal proportions. They always had one proportion in land, they had one proportion in fine art, museum quality fine art, and one proportion in precious metals, so your gold and silver. And that's all they've done throughout their many, many generations, and it served them very well. And of course, when you have a huge amount of money and your stuff is increasing by 5-10%, that can be ridiculous amounts, right? Versus when you're everyday average Joe like us, who might be starting out with a couple hundred, couple £1,000, then that 5-10% is going to be way less, obviously, enticing. So definitely matching your stage in your wealth accumulation journey as well as your risk appetite, because some people, we get it, just aren't going to want to take the risk and dive into the world of NFTs and learn it, and it's going to be really alien to them trying to figure out whether this picture of a monkey is worthwhile buying, because it's just like a crazy concept, right? But hopefully that's where organizations like the Moonshot DAO, for example, can come in, because that's the gap where we're aiming to fill. Because our main audience that we are trying to attract with the Moonshot DAO, and the whole purpose is to bring together a group of people who are your everyday investors, everyday business people, not from super techie crypto backgrounds, who understand that there's this crazy exciting world of crypto and NFTs where the potential rewards are massive, but so is the risk. And so they just want to have a little bit of exposure, a few percentage points of their net worth to chucked into this crazy world of NFTs, so they can have that little bit of exposure and potentially get some of the rewards. And of course, by doing it through this DAO, when we're a group of people brought together, we have that knowledge share. So all of a sudden, it's not just on you to figure out NFTs, because you've got a whole group of people on a collective mission. And then, of course, the financial risk is greatly dispersed as well and mitigated, because now all of our money's put together. So by default, you're only having a small percentage of it, and so on and so forth. So that's how we've sought to bring in more people onto this journey, with trying to mitigate as much risk and headache for them as possible, whilst also allowing them that little bit of exposure.
Yeah, and I think it is that group sort of that community of people that that is so important, because I know, with the benefit of hindsight, because I stayed in touch, or certainly stayed on the email list of the founder of the Property Investors Network. His name's Simon Zucchi. And I only really got introduced to this world of like personal development books and people, and that sort of that whole world in 2007, because I got an email from as I say, I remained on his email list, and he was promoting the National Achievers Congress that was held at the Excel Arena back in 2007, and I went along to that, and that's where I saw Tony Robbins for the first time. And then found out about first book I'd read in that sort of arena was The Success Principles by Jack Canfield, and it just introduced me to all these things which I then kind of got very into,
which arguably then must have led you to this audience in the Dragon, if we fast forward X amount of years.
Very true. No, absolutely. And so it was all connected, but the kind of, I guess the bit I didn't do back in 2003, and I suppose it was a bit more of a challenge back then, that I wasn't invited to a Discord to communicate with, or a group on Twitter or whatever, because that wasn't even a thing in 2003. And so there was, I didn't stay connected, but had I, because they have gone on to the pin meetings and the people in it, and they have gone on to be extremely successful. So even just sort of staying connected and being part of that community would have been a very, very sensible decision. But that's the beauty of what we're doing with the Moonshot, right?
Exactly. That's what it's there for.
And I think we've talked about it in previous episodes a little bit in terms of the benefits of NFTs at this stage, which is especially now, whilst the market is kind of doing what it's doing, people are very interested in these meetups, and actually having the opportunity to get together with people and have discussions about NFT journey so far. And that is
Isn't
bringing about, other opportunities as well. So it's just a great time to get involved.
100%. And I think anyone on the fence around exploring the world of NFTs, crypto, all that jazz, the one thing you got to factor into your decision making is the risk to reward ratio of an opportunity when it's put in front of you. And so when it comes to NFTs, the risk to reward is like pretty insane, because it could be, on one hand, a 10, 20, 100x, and it could go to zero, which means, if you're going to chuck $1,000 in it, there is a chance that goes to 100 grand, and there's a chance it goes to zero. But, providing that $1,000 is only a small bit of your net worth and not all of your life savings, some people would say, well, that's actually well worth a calculated punt. And a lot of very successful investors have a bit of a motto, and that is whenever they get an opportunity that is presented to them, that is a 50, 100x opportunity, they'll take it. Because they know their hit rate with these opportunities, the amount of times that's going to pop off, is going to be fairly slim. But you can afford to miss a load when the reward is so high. Because, if it's a 100x opportunity and I fire 20 times and only hit once, well, then I've still 5x'd all my money from that's gone into that, right? If that makes sense.
Yeah, absolutely.
So that's the thing to factor in. So we're not saying YOLO all your life savings into NFTs and crypto, just to be crisp, clear, and have that on the record. But what we are saying is, you've got a little bit of an appetite to get your money working for you, then there's plenty of avenues you should explore. Now,
yeah, and I want to say something potentially quite extreme at this point, because it's something I've been thinking about a little bit recently, because talking to a couple of people, one a friend of ours in particular, who is potentially in the process of moving house at the moment. I mean, I don't know, I'm really going to say this so that we have some evidence, and we can look back on this in 12 months' time and see if my idea is crazy or, in fact, would have been a really, really good move. And I'm not in a position to make this move, so I'm going to say it. Definitely not as financial advice for anyone, but just to sort of, I guess, it signifies my conviction in the NFT market at the moment, and that is, like, instead of this friend moving house and sort of trying to, because he's trying to get a slightly bigger, more expensive house, which I think at this stage of the market is just potentially not a great move. I think over the long term, it probably doesn't matter, whatever house prices do.
Yeah. Because I guess for those listening, if you look at the house price index, the average house price across the country for the last 20 years, it's just been on a steep incline, right? So right now it's like all-time high, mega peak.
So the prices are as high as they're going to be. And it really does feel, I mean, I've been thinking this over the last 12 months, but it feels now more so than ever that we're surely going to see a decline soon, or certainly within the next kind of 3 to 6 months, I would have thought, which means, any transaction done right now, or certainly within the next 6 months or so, especially as they're encouraging people with stamp duty savings and all this sort of stuff, there will be a lot of transactions, I'm sure. But after that, I certainly wouldn't be surprised if prices start to come down, and therefore, you've bought that house, and you're stuck in it, in the next sort of 12, 24, who knows how many months' time, as it's worth less than what you paid. And I was just thinking, like, if I was in that situation, I would have a strong argument with myself at the moment to just sell the house whilst it is at the all-time sort of high. Hopefully, whatever equity in it, invest elsewhere, and I would instead of buying somewhere new at another sort of all-time high, I would rent for a period of time, and I'd choose a blue chip project, and I'd buy Punk, to be honest. And yeah, I'm interested to see in a few months' time or a year's time or whatever, whether that thesis would have paid out. Because if you've got money, it's like you've been saying, if you've got money tied up in something, and a lot of people have different opinions over whether your primary residence is ever an investment or actually just sort of, probably a deep subject to get into, which so we'll avoid it. But yeah, if you've got money tied up in there that could be working for you elsewhere, then maybe it's it could be a good move.
I love that. The pure conviction. So you wouldn't be buying a house right now. You'd be selling that sucker and buying a CryptoPunk.
Yeah, because I would feel as though, like, having got more and more involved, in NFTs over the last 12 months, you don't want to buy at the all-time highs, because there's that uncertainty that you might be buying at the top and then you're holding on to it. You have no choice. You've got to hold on to it. Unless you want to tax harvest some losses or whatever, you got to hold on to it until it gets back to that price, or goes up and you can make a profit. And I feel as though with the property market at the moment, we're at that all-time high.
There's a very simple little saying in the investing world that that I just love, and it's, if you buy on big green candles, then you get big red candles. And if you buy on big red candles, you get big green candles. And so for the listeners at home, that refers to a typical chart in the trading world where you chart the price of an asset. It could be a stock, a commodity, Bitcoin. And when you have big green bars, that signifies the price has been going up. And when you have big red bars, that means the price has been going down. And so if you buy an asset when you've got big green bars, when the price is going up, and normally that means, you're going to get big red bars, which means the price of that asset is going to go down, which, as we're talking about now, housing prices are all-time highs, really high. If you buy now, is it potentially going to go down over the next few months? Who knows? That, strong argument that it's for, and, potential argument against. But if you buy on big red bars, which is definitely what we're seeing right now in a lot of assets, I mean, across a lot of the stock market, to be fair, as well as crypto and, of course, NFTs, where the prices have plummeted. So if you looked at the charts for them, you'd have these huge red bars. These typically mean if you can buy in on these opportunities, then you're going to get the big green bars when the price goes back up. And in fact, very wealthy investors, Warren Buffett and the like, they owe huge proportions of their wealth to the purchases that they've made during every recession. And for the astute investor, they see these recessions, these pullbacks in the markets, as incredible opportunities, because all of a sudden prices come tumbling down. And if you're able to then purchase these stocks, these assets at these, in essence, discounted prices, then the growth you see immediately after is like ridiculous. And so I remember I got so lucky because I opened up a stocks and shares ISA in March 2020. Literally like the day that the COVID crash in the stock market happened. And so I opened it up and I only put a modest amount of money in there. And literally like within the space of a week, it had gone up like 50% or 30% because it was when it had just dropped completely. And I just, by sheer luck, there was no planning to it, bought in them. And then like it immediately just had that big rebound. And so, I fancied myself a bit of an investing god after that for a short time.
Timing is everything.
Exactly. But of course, the caveat there is it's got to be in an asset that is going to survive the recession. You go back to the dot-com bubble. Those people who bought Amazon, Facebook, Apple stock during that huge crash are now the ones with billion-dollar portfolios. Those who bought, Netscape and all these other companies that did go under lost their life savings. So there's a big caveat there.
Yeah, and I think that's where people would think I'm probably crazy with my proposal to sell your house, release the equity, and buy a CryptoPunk, because of course there isn't that certainty, or there's, I guess, there's little grounds for that kind of certainty.
100%. But let's explore that, Matt, because you clearly have the conviction and you clearly have a well thought through thesis, re the CryptoPunks. So let's just explore that. What is your CryptoPunk thesis that fills you with that level of confidence at the moment?
Yeah, so for me, it's just everything I've read and heard, kind of much more experienced people than me kind of say about the fact that it is the original. It is the OG project. It's the one that so many people have sort of used as the North Star, if you like. They've copied, they've tried to replicate, and it's just I think the main thing I have complete conviction over is NFTs and their use case in the future, and therefore CryptoPunks have earned their place in history, because in 10 years' time, when NFTs are being used for tickets to all events, employee ID cards is something I read about the other day. Like, a new employee on their first day will be issued an NFT, and that NFT will get them access to everything they need as an employee of this business.
Like one of these,
like a swipe card, exactly. And so I have no doubt, because of the benefits of the on-chain sort of NFTs are I'm very clear here to stay, and therefore when people Google it in 20 years time, what did it start with? Well, CryptoPunks are a significant sort of point in the timeline of NFTs, therefore, and there will only ever be 10,000 of them. We've talked about this before, and so that's 10,000, potentially 10,000 things that can be owned by a very small group, maximum 10,000 people. That people are just going to want to collect and trade, and therefore the value, I truly think, will be significant.
I tell you what's interesting as well, particularly with the CryptoPunks, which a lot of NFT collections don't have, but at the risk of getting a bit explicit here, you could view CryptoPunks as unfuckupable, because the collection was created and now it just exists really as a bit of a testament to the history of NFTs, one of the first collections to come around. And like you said, the team behind it, the Lava Labs guys, the collection is created and it's developed its value because of its really historic history, and also just how iconic it has become in the crypto community, and how valued it has become by a lot of serious investors, celebrities, and the sort of clout attention that it has generated. And because of that, it will always have its place. And when a lot of other NFT projects use their initial NFT launch just as a funding mechanism, really, with a promise of building out a whole host of other things, be it in real life events, projects, gaming, metaverse, whatever you might be, all these grandiose promises, well, the success of that project now is tied to that team's ability to deliver on those promises. And CryptoPunks is relinquished of that, which I think only adds to it being a much safer investment as well.
I was going to say that provides like this invisible safety net, right? Because you think about it, even in relation to the Bored Ape Yacht Club, or the kind of the much bigger scale of the other side, or other deed for other side, this kind of metaverse game thing that they're working on. You noticed every time they go quiet for a long period of time, where they're clearly working on stuff in the background. It's it's this huge company now. They've definitely got a lot of people working extremely hard to deliver on their promises. But when they go quiet, it loses traction, because people do. People are very short-term focused, aren't they?
And they've got to pull out another trailer or something to fuel the hype train and keep it going. All at the end is either going to come off and pull off and be amazing, or go out with a bang. And a great in real life example of this, it was in the gaming world in the last couple of years. And so I'm a bit of a gamer, in my spare time. And there was a fantastic game that was teased many, many years ago called Cyberpunk 2077. And it was being created by a studio that created a game known as The Witcher 3. And that game, The Witcher 3, won all sorts of Game of the Year awards, because it was just touted as one of the most, fine, best created games that's ever existed, like a piece of art. Everything about it was just so miraculous, from the gameplay to the open world, the storytelling. It was just like an absolute meal of enjoyment for everyone. And so when they announced they were coming out with this new game, Cyberpunk 2077, the gaming market went crazy. I remember they dropped a trailer at E3, which is a big games conference, and literally the internet just lost their mind because it looked so incredibly good. And so from then on, this literally became the biggest ball of hype and speculation that there ever has been in recent history. So much so to the point that, in hindsight, there was actually no way this game could ever live up to the hype that was generating for it, because people just thought it was going to be this absolutely life-changing, never before seen experience that is going to truly blow their minds. And of course, what happened come release day, it's actually a lot of drama. So it got delayed and pushed back, saying they were polishing it off and didn't want to release it until it was ready. And then, my goodness me, what ensued was just the biggest flop of a game launch you've ever seen, because the product finally
it can
rolled
only
out.
disappoint.
Exactly, but it finally rolled out, and the game was good, but it rolled out. It had loads of bugs. It was nowhere near the level of detail they promised. All these grandiose things that they had shown in trailers and stuff hadn't made it into the final game, and it just oh my god, fell flat on its face. So much so, PlayStation actually removed it from the PlayStation Store because there was basically saying it was almost like false advertising, that this game had promised all this stuff and hadn't been delivered. The game studio had to refund millions of people. So, if you wanted a refund for the game, they just were like, right, we're going to give you a refund. We're just really sorry. And it was this whole spectacle and whole drama, which again just shows when you've got these weighty expectations that people can build up in their own heads, sometimes that is a recipe for disaster if it reaches that critical mass. And shows how much the ability to execute is so important.
No, absolutely, and it's another thing that points to the importance of choosing the right project, and not just getting involved at the right time, but really thinking long and hard about the specific project that you're going to get involved with. And I think every week that goes by, we're learning more about the sort of projects that we're already holding, and also thinking about getting involved with. So,
and just to build on the CryptoPunks thesis, because when I am interested in learning more about different investments, I'm very keen to seek out information from very wise investors. And a great place where I've done that in the NFT world is from the Proof podcast, which Kevin Rose hosts. So Kevin Rose is a big Silicon Valley guy. You can go away and Google him. And he has a very successful NFT project, one of the most successful ones around. And he also has a podcast. And on his podcast, he interviews a whole host of really the very top echelons of the NFT community, from artists all the way to investors. And he's got a great podcast with a gentleman called JDH. And JDH is a very now prolific NFT investor. He's I wouldn't want to guess his age, 40 to 50, middle-aged man who's got a background. He started his own fintech company, very successful, big exit, done very well for himself, and a very smart guy. And he was quick to get onto the NFT bandwagon and make quite a few initial investments. And so his portfolio now is ridiculous, and it's just will be worth, millions and millions and millions. But he talks about, in his podcast with Kevin Rose, his CryptoPunks thesis, because this was when he really got NFTs, and this is when he went kind of all into the investing. And his thesis around the CryptoPunks, which please go and watch on his podcast, because I'll give you a very butchered version of it here, I'm sure. But it was when he identified that this was an asset class that the uber wealthy, the serious top 0.01% would be willing to play around in. Because when you have such extortionate amounts of money, that all of a sudden you've got all the Lambos and the Bugattis and the mansions around the world and the holidays and the women and the restaurants and all that jazz. You can only do that for so long before really it all starts to feel the same, right? And with the ever-growing importance of our digital lives and how much that is taken over and just continues to do so with our rises in screen time and just everything, he realized that, okay, as we move into this digital age, what is the sort of digital version where these uber wealthy people are going to want to get involved ultimately to flex? Because when you have that much wealth, it really is a case of just flexing and having that clout and basically just showing off, right? When you've got all that dosh, which, fair enough to them. If you've got that much dosh, go for it. And so that was when his thesis hit with CryptoPunks, because you've got these, first of all, the NFT whole, fundamentals about these digital assets that are now scarcity. You can have verified ownership and can be bought and sold. So there's now this legitimate market for this sort of digital asset, which didn't exist before. And then secondly, with CryptoPunks, this original project, which had already built a bit of traction by this point for being historic, iconic in terms of the art, and just, everything we've talked about in terms of the provenance. And he felt like that was going to be his own, where these uber wealthy would come and play. Because to have one of the super rare zombies, for example, or the aliens, where there's only, I don't know how many there are, dozens of them, that is like the real flex. And lo and behold, that's what we've seen. I mean, in this last week, I swear Punk has been sold for 1,050 ETH, I think.
Yeah, there was a hooded ape sold in the last week, which I also can't remember the specific the exact figure, but it was millions. It was a huge amount of money, but it was also a lot less than I think anyway. Certainly one of them was than a similar one had sold for a few months ago, suggesting that that this person is making the most of timing and the discounts currently available, as we talked about before.
A smart investor. An investor with a taste for apes.
Yes, absolutely.
Fascinating.
Right, well, I've got a couple of points, Matt, that I just want to address as well, since we're talking a lot about investing. And, for those people who have got a good income either in a nice paying job or they're running a business, then, starting to look at how you can get that money to work for you, go and investigate your stocks, go and investigate your crypto, your NFTs, and see what really tickles your fancy, right? You can understand what your own risk appetite is and make your decisions from then on, and of course, or go down the property route, etc. All the things we've talked about. I just want to address those people who might be listening who might not, might be early on in their career or might not be running a business, and so might not even have the big chunks of income available to start chucking around, even, a few $100s in NFTs or whatever. Because my advice for them, and it'll be interesting to hear your thoughts on this as well, Matt, would be that the best investments you can make at that stage in your life are all in yourself, and in particular in your knowledge and your understanding of certain topics, skills, and so on and so forth. All the aspects that are going to be able to basically improve your ability to climb up the career ladder, start a business, and start to grow your income, so that you're then in a place where you're able to think about this investing and actually do a lot more with it. So if you are at that stage, definitely prioritize your time, effort, and energy into upskilling yourself, learning some high-value skills, get on the self-development train, because everything you put into those, early years will prove to be formative, no doubt, in your success as you progress. And I think we can both attest to that, Matt, that we've both spent, probably many thousands of pounds on trainings, courses, programs, events to really upskill ourselves in many aspects of our lives that have ultimately helped propel us to a place where we're now able to, talk about investing in NFTs and all this malarkey. Wouldn't you say?
I completely agree. I mean, the great thing is these days, you don't even have to pay any money. As long as you've got access to YouTube, there is actually, I've paid to see, we've talked a lot about Gary Vee on this podcast in previous episodes, and I've paid to see Gary Vee a handful of times, and every time he's said exactly what you hear him say on YouTube for free. Like it's there is no reason to give him or the organizers of whatever event he's talking at any of your money, because actually just spend some time watching stuff on YouTube. You'll learn the exact same thing. But yeah, I mean, a great example is the event that we were at last weekend. I can't remember what the lowest value ticket to that was, but I think it's a couple £100. And we heard from Dragon's Den Sara Davies. We heard from the main or COO of Brewdog,
David McDowell.
David McDowell of Brewdog, £1 billion company, which is just, it's got to £1 billion in value since 2007. So 15 years. It's just the hearing. I mean, I took so much away from that guy's talk, because really useful, practical stuff that you can do either in your team or in your department if you're working in a company, or in your business if you've got your own business, and a handful of others. And so it is the people that you spend time with, it's the books you read, it's the videos you watch. It's absolutely there are so many things that you can do to invest in yourself, but as well, sort of meeting people, because it wasn't just the people that we saw on stage or heard their keynote talks last weekend, it was also the other 1,200 people in the room, and talking to them, because everyone has their own story and lessons you can learn. And so, yeah, I think I completely agree with you that there's depending on what you want to do and how you want to do it, investing in yourself is the best play.
100%. So, to our wonderful listeners, thank you for tuning in thus far. But I hope that this main takeaway for you is that you're investing in whatever form that may be, depending on where you are, be it into some nice assets to get that money working, be it into yourself so you can get yourself into a position where you can start putting your money to work to you. You just need to get started and make that a bit of a focus. It's very easy, and what is quite noticeable is during, economic downtimes like we're experiencing right now, people's appetite for investing generally just like falls out the window and goes to zero, which actually arguably should be the reverse, because right now is the time where these opportunities are going to present themselves. And if you are able to educate yourself on what those opportunities might look like and which opportunities fit your particular risk appetite, then you're going to be able to make some of these shots and take advantage of some of these opportunities when they present themselves. So there's no time better than right now to begin your investing journey in whatever format that might be.
Completely agree. Absolutely. And I think it's probably, that sounds unusual to a lot of people, because the majority of people just don't understand. But they've only been told it from other people that didn't really understand. And that's how things happen, right? And so, but if you really do some research in it, Ray Dalio is a person that would be, he's an incredibly sort of experienced and wealthy investor who just a quick YouTube search and watch a few of his videos where he's actually done some sort of almost cartoon style, like really easy to understand videos about investing, would be a big recommendation from my part, because he's done so much research on it, and you'll see that you'll learn that what Elliott said is absolutely correct, and that means now is a great time, and there will be so many opportunities over the next few months.
100%. An interesting tidbit just to end on them as we're thinking about economic downtime, because my favorite quote from investor Warren Buffett is all about how when others are fearful, you should be greedy. And when there's blood in the streets, that's when it's time to act. Something along those lines. And he's obviously a very prolific investor. But what was very interesting as well, and this ties into your high conviction, Matt, around the CryptoPunk, is that nearly all of Warren Buffett's wealth has only ever come from 10 investments. Did you know that? Mm-hmm. Yeah, so he just made, obviously he's made more than that, but the ones that attribute, the very, very vast proportion of his wealth were 10 high conviction plays that he made. Not, 100 little scattergun plays, but 10 very, very high conviction plays that have generated that massive return. So just an interesting tidbit, because I know a lot of people like to push the super diversified portfolio and just have your money spread across everything to like totally mitigate your risk. And there is a very good case for that. And that is, the logic stands true. But also when you see an opportunity and you understand the thesis and you get it and it sort of feels right and you have that level of high conviction, which only comes after an extensive level of research, right? You can't have high conviction just based on a gut feeling, right? That's not what Warren Buffett did. He got this conviction, much like yourself, when you spent a lot of time researching an asset, understanding an opportunity, and the whole timing, the sort of stars align, and you're like, right, this is the time to do it. That's called well thought through conviction. And those are the times when, if you can get yourself to that stage and pull the trigger, you can have these, excellent astronomical sort of returns. And that's really what we should all be on the lookout for as investors.
Yeah, absolutely. And that is, if there is any free time, as the nights are drawing in and all that sort of stuff is getting darker, less to do, it's a good opportunity to read some stuff that perhaps you haven't read before, and invest in yourself by learning about these things.
100%. And I mean, kudos to you for listening to this podcast, because that is a great first step in that direction. I had another really interesting tidbit from, I can't remember who it was from, but they're talking about how TV has been created to basically numb the potential of really intelligent people, which I think is a very, extreme viewpoint of TV, because, we all need our leisure, and, we all watch TV every now and then. But when you factor in, okay, across a lifetime, how much time do you spend in the evenings, at the weekend watching TV, which even if you just didn't cut it out but spent a fraction of that actually watching some YouTube videos by Ray Dalio on, how the economic system in the world works, and, understanding the different investment opportunities, how different would your life be, and how much more of your potential would be realized as a result of that concerted effort. It's an interesting little thought.
Very true. That's so true. And fills me with regret. I think, no, I'm kidding. I definitely don't spend too much time watching TV, but I have in the past. So I'm going to take that one on board, actually, and remember that.
There you
Very
go.
true.
There you go. There you go. Well, lovely stuff. Look, thank you to our wonderful listeners, as always. We hope you have enjoyed this. Matt, do you have any closing remarks?
No, not really. I think just to hopefully, if you are finding this useful and valuable, please perhaps like, subscribe, share it with your friends, family, and follow our social feeds for the Moonshot DAO. And every Monday, you'll receive notification of the next episode. So I hope you find it interesting, and thank you very much for listening.
Absolutely. Thank you very much, Matt. It's been a pleasure as always. And yes, just to close us off, anyone listening who's thinking about investing, I hope this serves as a friendly little nudge for you to get yourself out there and start doing it in whatever form is most suited for you. Ladies and gents, it's been a pleasure as always, and take care, and remember, to the moon.